Silver just ripped higher, and the real move may not even have started yet. While most people were still watching gold, silver quietly stole the entire session. On April 8th, after the United States and Iran announced a 2-week ceasefire, precious metals didn't just move, they reacted violently. Gold surged. Silver surged harder. And that divergence is not just noise. It is the first signal that something deeper is happening underneath the surface. Because silver does not behave like gold. Gold moves when people are afraid. Silver moves when people start acting on that fear. And that distinction is where the opportunity and the risk begins. Now, on the surface, this looks simple. A geopolitical headline hits the market. Tensions cool slightly. Traders reposition. Safe haven assets catch a bid. End of story. But that is not actually what happened here. What you saw was not just a reaction. It was a release of pressure. And pressure in financial markets is something you ignore at your own risk. So let's break this down properly, because the headline is not the story, it is the trigger. The real story has been building for years. Silver has been running a structural deficit, not for a quarter, not for a single year, but for multiple consecutive years. That means the world has been consuming more silver than it has been producing. And unlike currencies or financial assets, you cannot simply create more silver when demand rises. It has to be mined. It has to be refined. It has to be physically delivered. And every one of those steps takes time. So what happens when demand accelerates faster than supply can respond? You get tension in the system. At first, that tension is invisible. Prices move slowly. Markets look stable. Analysts debate whether it even matters. But over time, that tension builds. Inventories get tighter. Available supply shrinks. Buyers become more aggressive. And eventually, all it takes is one catalyst, one headline, one shift in sentiment, and that pressure releases all at once. That is what a 7% move looks like. It is not random. It is stored energy being unleashed. Now here is where it gets even more interesting, because silver is not just a precious metal. It sits at the intersection of two completely different worlds. On one side, it is a monetary asset. It trades alongside gold. It reacts to inflation, interest rates, currency movements, and geopolitical instability. On the other side, it is an industrial metal. It is used in solar panels, electronics, medical devices, energy systems, and advanced manufacturing. That dual identity is what makes silver unique, and it is also what makes it explosive. Because when both sides of that equation align, when investment demand rises at the same time industrial demand stays strong, the market does not just tighten, it accelerates. And right now, that is exactly what appears to be happening. Industrial demand has not collapsed. Global investment interest is rising, and physical supply remains constrained. That is not a normal setup. That is a high-pressure environment. Now layer on top of that what is happening globally, particularly in China. China is one of the largest consumers of silver in the world. When China increases its imports, it is not just a statistic, it is a signal. It means more physical metal is being pulled off the global market. It means less supply is available elsewhere. And most importantly, it means that demand is not slowing down, it is accelerating. And once physical silver moves into strong hands, into industrial use, into long-term holdings, into national stockpiles, it does not come back easily. That is how supply gets locked away. That is how liquidity disappears, and that is how price starts to move faster than people expect. Now think about how markets actually behave in this kind of environment. At first, very few people notice. The move starts quietly. Then it gets dismissed. Then it gets questioned. Then it gets chased. And by the time most people realize what is happening, the price has already moved significantly higher. That is the psychology of every major commodity rally. And silver, historically, is one of the most extreme examples of this behavior. Because silver is a smaller market than gold, it is thinner, it is less liquid, it is more volatile. And that means when money flows into it, the impact is amplified. Moves that would be gradual in gold can become explosive in silver. That is why it is often called turbo gold, not because it is better, but because it is faster. And speed in markets changes everything. Now let's talk about what happens after a move like the one we just saw, because this is where most people get it wrong. They see a big green candle and assume the opportunity is gone. They think they missed it. They wait for a perfect pullback that never quite comes. Or they hesitate just long enough for the market to move again without them. But historically, strong silver rallies do not end with a spike. They begin with one. The first move grabs attention. The second move builds conviction. The third move pulls in the crowd. And once the crowd arrives, the dynamic changes completely. Because now you are no longer dealing with just fundamentals. You are dealing with positioning. You are dealing with momentum. You are dealing with human behavior, fear of missing out, urgency, and the need to act before it is too late. And that is when markets can overshoot. That is when rallies extend further than expected. That is when price disconnects from what most people consider reasonable. Now, of course, none of this happens in a straight line. Silver is not a smooth trend. It is volatile. It is aggressive. It can move up fast, and it can correct just as fast. And that volatility is exactly why it creates opportunity. Because volatility is what shakes people out. It creates doubt. It creates hesitation. It forces weak hands to exit. And every time that happens, stronger hands step in. That is how trends build. Not in a straight line, but through a series of moves, pauses, and continuations. So yes, silver can pull back. It can retrace. It can test lower levels. But in a structurally tight market, those pullbacks tend to get bought. Because the underlying imbalance has not been resolved. The deficit is still there. The demand is still there. The supply constraints are still there. And as long as those factors remain in place, the broader direction remains intact. Now let's zoom back into the present moment, because this is where things get critical. Silver has just broken out of a major range. That is not just a technical detail. That is a shift in market structure. When a market breaks above resistance, it changes how participants behave. Short sellers start to cover, new buyers step in, trend-following systems activate, and suddenly what used to be a ceiling becomes a floor. That transition is where trends are born. And if that new floor holds, the probability of continuation increases dramatically. But here is the key point. Markets do not need constant news to keep moving. They need conditions. And the conditions right now, tight supply, strong demand, macro uncertainty, and rising attention, are already in place. The ceasefire may have been the spark, but the fuel was already there, and fuel, once ignited, does not burn out instantly. It builds, it spreads, it accelerates. Now consider the broader macro environment. Interest rates remain a major variable. Inflation has not fully disappeared. Currency stability is still being questioned globally, and geopolitical tensions, even with a temporary ceasefire, have not actually been resolved. They have been paused. And paused risk is not the same as eliminated risk. That distinction matters, because markets price risk differently depending on whether it is gone or just waiting. And in this case, it is very clearly still present. That keeps a bid under precious metals. And when precious metals are bid, silver tends to outperform in the more aggressive phases. Now let's talk about what could happen next, because this is the part that actually matters. If silver consolidates here, if it holds these higher levels instead of collapsing, that is a sign of strength. It means buyers are willing to step in at higher prices. It means the breakout is being accepted, and it means the market is preparing for another move. On the other hand, if silver fails to hold, if it drops sharply back below key levels, then the move may need more time to develop. But even in that scenario, the structural story does not disappear. It just resets. And resets in strong markets often lead to the next leg higher. So either way, the bigger picture remains intact. This is not a one-day story. This is not just a reaction to a headline. This is a market that has been tightening for years, finally starting to show it. And when markets reveal their true condition, they rarely do it quietly. They do it with volatility. They do it with speed. They do it in a way that forces people to pay attention. That is exactly what this move did. It forced attention, and attention is the first step in every major rally. Because once people start watching, they start thinking. Once they start thinking, they start positioning. And once positioning begins, momentum follows. That is how trends form. That is how they grow. And that is how they eventually become impossible to ignore. So the real takeaway here is not that silver moves 7% in a day. The real takeaway is why it was able to. Because markets do not move like that unless something underneath them is already strained. And right now, that strain is still there. The supply-demand imbalance has not been resolved. Global demand is not slowing, and the macro backdrop is still supportive. That combination does not guarantee higher prices, but it creates the conditions for them. And in markets, conditions are everything. So no, this is not just a spike. It is a signal that silver is no longer sleeping, a signal that the market is starting to wake up to the imbalance, and a signal that the next phase, if it comes, could be much more aggressive than what we have just seen. Because silver does not move slowly once it gets going. It moves in bursts. It moves in waves. And when those waves build, they can carry prices much further than most people expect. So the question is not whether silver just moved. The question is whether this was the beginning of something larger. And based on everything we are seeing right now, that possibility is very real.